The SM Entertainment stock manipulation scandal just got messier. As you know, as we have discussed, prosecutors recently asked for a 15-year prison sentence for Kakao founder Kim Beom-su over charges of inflating SM shares price to block HYBE's takeover. But now, another twist has emerged. Youngpoong, which is one of Korea's big conglomerates, is publicly accusing Korea Zinc, its own affiliate and one of the world's largest zinc smelters, of secretly bankrolling the scheme. Now, for newcomers, here's a quick refresher. In early 2023, HYBE, the agency for BTS, made a tender offer for SM, prompting a takeover battle with Kakao. Prosecutors claim that Kakao orchestrated a plan to manipulate SM's share price, overpaying to block HYBE's bid. And the case has already led to high-profile trials and prison sentencing demands. Now, Youngpoong claims, one of the big conglomerates in Korea, they claim that Korea Zinc chairman Choi Yun-bum was a key player behind the suspicious funding that fueled SM's soaring stock price. According to Youngpoong, Korea Zinc put 101.6 billion Korean won into a private equity fund called Havana No. 1, operated by One Asia Partners. And this money, they say, was then funneled directly into buying SM shares at a crucial moment in February 2023. And what makes this explosive is that Havana No. 1, the fund, was essentially a Korea Zinc only fund, with Korea Zinc covering over 99% of its capital, 99.82% to be exact. And Youngpoong argues that no such large-scale, lightning-fast investment could have been made without Chairman Cho's direct approval. They also note Mr. Choi's close personal relationship with Chi Chang-bae, the head of One Asia Partners, suggests collusion. Here, the one on the left is Chairman Choi. Now, at the center of this web stands One Asia Partners, which is a private equity firm that prosecutors say was much more than a bystander. So in July's court sessions, prosecutors revealed that of the 8 private equity funds that One Asia Partners was running back in 2023, 6 were invested directly into Kakao affiliates. And this wasn't a coincidence, prosecutors argued, but a sign of a symbiotic financial relationship between Kakao and One Asia. For example, the Violet No. 1 fund invested about 100 billion Korean won in Kakao VX, which is a sports tech arm of Kakao Games. And the Tangerine No. 1 fund put 99.5 billion Korean won into Tide Square, which is a travel company that partnered with Kakao's aviation business. And in another deal, One Asia became the largest shareholder of Greygo, which is a Kakao Entertainment affiliate, by investing 100 billion Korean won for a 42.5% stake. By the way, Kakao currently has more than 100 affiliates. They used to have more, but they reduced the number, but still they have tons. And for prosecutors, Korean prosecutors, this wasn't normal diversification. It looked like One Asia was functionally embedded inside Kakao's ecosystem, setting the stage for coordinated moves during the SM takeover battle. Now, prosecutors allege that in February 2023, when HYBE launched its public tender to buy SM shares at 120,000 Korean won apiece, Kakao turned to One Asia. And in exchange for promises of future stock buybacks and merchandise licensing deals, One Asia was allegedly asked to mobilize a 100 billion Korean won stock buying operation to push SM's price above HYBE's offer. Phone records and testimony suggest the coordination went pretty deep. On February 10th, Kakao's then investment chief, Bae Jae-hyun, and One Asia's CEO, Chi Chang-bae, spoke for nearly 30 minutes. Prosecutors argue they were actively discussing how to execute the stock purchases. Around that same time, President Kim Tae-young of One Asia, who also held a seat at Kakao VX, exchanged text with both men, indicating that he was unavailable for calls. Messages that prosecutors say were later deleted once financial regulators began investigating. And in court, President Kim Tae-young of One Asia, denied being part of any conclusion, saying that he was only contacted about Kakao VX matters. But prosecutors pressed him on why his statements changed across multiple investigations, pointing out contradictions that, in their view, painted a picture of coordination. And back to today's news. Now, Young-pung, the largest shareholder in Korea Zinc, has stepped forward with explosive claims, alleging that Korea Zinc chairman Choi Yong-bum was the silent funder behind One Asia's Havana No. 1 fund, pumping in 101.6 billion won almost overnight to buy up SM stock. Even more suspicious, Young-pung says, was the timing. On February 10th, Kakao's team allegedly requested that One Asia buy up to 100 billion Korean won worth of SM shares. And just days later, Korea Zinc's fund bylaws were hastily changed, shortening approval procedures from weeks to a single day and giving One Asia unusually favorable profit-sharing terms. Now, bylaws are the official internal rules and regulations that govern how an organization, company, or fund operates. For example, in a corporation, bylaws spell out how the board of directors is elected, how meetings are run, who has decision-making power, and how responsibilities are divided. And an investment fund like Havana No. 1, bylaws define how the fund is structured, how profits are shared, and how investors can join or exit, and what procedures must be followed before money can be deployed. So in the SM case, when reports say the fund's bylaws were rewritten in one day, it means the fund's internal governing rules were suddenly changed. Rules that normally take weeks of legal review, allowing the money to be moved faster and under unusually favorable terms. So, within days, by February 16 to 17, Korea Zinc's money was deployed in SM stock purchases, exactly when HYBE's tender was vulnerable. According to Young-pung, this wasn't a normal investment, but a deliberate, strategic move to block HYBE's takeover. Even more suspicious, Young-pung says, was what happened afterward. So by April 2023, Korea Zinc received half its money back in cash, about 52 billion Korean won in cash, and it was eventually handed 440,000 SM shares, which is worth roughly 40 billion Korean won, as a dividend before the fund was shut down. Very early, far sooner than the typical 5-year lifespan of such vehicles. And for Young-pung, this is proof that Korea Zinc wasn't just a financial investor. It was part of the stock rigging scheme. And Korea Zinc flatly denies all allegations. In a statement, the company said the investment was a lawful and financial move to manage excess cash reserves, nothing more. They argued that as a limited partner in the fund, they only provided money while the fund's general partner, One Asia, handled the actual investment decisions. In other words, Korea Zinc claims it wrote the check but didn't know or control how the money was used. They also stressed that prosecutors have focused their criminal case on Kakao and One Asia, not on Korea Zinc. While Kim Beom-su of Kakao and his allies face possible prison terms, Korea Zinc has not been indicted. And the company accuses Young-pung of dragging them into the scandal for political or corporate reasons, calling the accusations distorted claims and even threatening legal action for defamation. And to strengthen their defense, Korea Zinc links the issue to their bigger role in Korea economy, framing themselves as a key player in national supply chains and U.S.-Korea cooperation. And in their view, the scandal risks undermining a company that serves as a backbone of Korea's industrial base. So what is striking here is very messy, but what's surprising here is how far the SM scandal now stretches. It started as a fight between Kakao and HYBE for control of a K-pop label. But then it grew into a legal case over alleged stock manipulation. And now it has pulled in one of Korea's biggest industrial firms, showing just how tangled the connections between entertainment, finance, and heavy industry can be. Now, if prosecutors or courts eventually find that Korea Zinc knowingly bankrolled the scheme, it would open the door to one of Korea's most influential industrial players being tied to securities crime. On the other hand, if Korea Zinc is cleared, then Youngpoong's public accusations may backfire, perhaps, raising questions about why one conglomerate targeted another so aggressively. Now, as we discussed in our previous video, the first instance verdict for Kakao founder Kim Beom-su is due on October 21st. And when prosecutors demanded a 15-year prison sentence for Kim, inside Kakao, employees reportedly reacted with disbelief. Some people wondered aloud whether such a severe sentence was fair, noting that while financial crimes are serious, the punishment being sought is at the very top of the sentencing scale. But fairness debates aside, one fact is pretty clear that the trial's outcome will directly shape Kakao's business prospects in its most important new ventures. For example, one of the biggest concerns is Kakao Bank, Korea's leading digital bank, actually. Under Korean law, a company cannot hold more than 10% of a bank's shares if it has received a criminal penalty above a certain threshold. And if Kakao as a corporate entity or Kim Beom-su himself as a fit and proper major shareholder loses that qualification, Kakao could be forced to sell off part of its stake. And that will be a major blow, especially since Kakao Bank has been central to the group's push into digital finance. Even more, Kakao has been building a Korean won-based stablecoin business, reportedly meeting with Circle Internet Group, the company behind USDC, US stablecoin. So they've been meeting with Circle executives and creating an internal task force to prepare for market entry once regulations are clarified. And if the court rules against Kim Beom-su, those plans could be dead on arrival, with government approvals blocked before the business even launches. Now, the risks don't stop at fintech. Kakao has also been investing heavily in AI, artificial intelligence, hoping to reposition itself as a next-generation tech player rather than just a platform company. Its upcoming developer conference is expected to showcase new AI-powered products built in collaboration with OpenAI, which is the company behind ChatGPT. And CEO Chung Sina of Kakao has staked much of her leadership on turning Kakao into a leader in AI and content-driven innovation. But global investors may be reluctant to back these projects if Kakao's reputation continues to sink under the weight of courtroom drama. Already, Kakao's stock fell over the past 5 days, it fell by 10%. But after prosecutors made their sentencing request, the stock fell nearly 5% in after-hours trading markets. And with the major investor roadshow IR event scheduled in Hong Kong, the timing could not be worse. So once again, the verdict is scheduled for October 21st for Kim Beom-su, the founder of Kakao. And when it comes down, it won't just determine the fate of Mr. Kim, it may very well shape the future of the company, Kakao. Now, here are some questions I would like to leave you guys with. Do you think Korea Zinc was simply making a routine financial investment at the wrong time, or does the timing suggest a deliberate role in Kakao's fight against HYBE? And why would Yongpung take the risk of going public with accusations this strong if they weren't certain of their evidence? And what does this tug of war reveal about the way power really works behind Korea's entertainment industry? And is the punishment that prosecutors are demanding, for Kim Beom-su proportionate to the crime, or is it a warning shot meant to rein in corporate power? So again, these are the questions I would like to ask you guys, and I'm looking forward to reading your comments in the discussions, and I'll see you in the next video. All right, see you guys later. Peace and love. Bye bye.